The owner of brands including Louis Vuitton, Dior and Tiffany is riding a surge in luxury spending. The sector is seeing major growth in the US and among China's middle class in particular. LVMH has seen its share price increase tenfold over the past decade. Well, let's just take a look at Europe's most valuable companies. As you can see, LVMH tops the tree by some distance in terms of market capitalisation. It's actually just dipped below $500 billion since crossing that threshold earlier in the week. Second is Danish pharmaceuticals multinational Novo Nordisk. And then in third is the world's largest cosmetics company, L'Oreal. So notably no tech firms or energy firms in the top three in Europe. And as I mentioned, LVMH has benefited from a booming luxury goods market. Have a look at how that's grown over the past decade. It took a big hit during the pandemic, as you can see here, but is now surging once again, way past pre-pandemic levels. Well, we can now speak to Erwan Rombourg, who is Global Head of Consumer and Retail Research at HSBC. Thank you very much for joining us on the programme. So just tell us, what is LVMH doing right?
They're doing a lot of things right. I think clearly what we've seen over the past 3 years is an acceleration of market share gains, great visibility, very high margins. And what's happening now is you're seeing quite a few earnings upgrades coming through. I think fundamentally, we had underestimated the impacts of the reopening in Europe, even more so in the US. And now you have Chinese consumers coming back, and they're moving the needle quite significantly.
That is what is surprising, though, is to see that luxury brands are doing so well when we hear so much about cost of living crises in various parts of the world and various financial strains on people. Why is the luxury market, I mean, it's bounced back and then some, hasn't it, since before the pandemic? How's that happening?
Well, I think, it's a period of time probably as well when consumers need a bit of escapism. And to be fair, the consumers who are purchasing luxury have relatively high financial means and are not completely immune, but obviously more resilient when facing inflationary pressures. And when you've been stuck at home for so long, I think you aspire to travel, you aspire to forgetting what we've just all been through. And there's absolutely no need to buy luxury. But again, luxury puts a smile on your face. Luxury changes your perspective. Luxury enables you to move to a more positive psychological place, I guess.
And of course, a lot of people saved up quite a lot of money during the pandemic as well. We can remember that people's savings went through the roof.
Yeah, you had a lot of pent-up demand, a lot of savings that you can tap into, certainly.
And they're making the most of that. What do you think it says about Europe that it's LVMH that is its most valuable company and not, for example, a tech firm or an energy firm like would be the case in other parts of the world?
Well, I just cover discretionary consumer companies, so it's difficult for me to comment on tech or other verticals or other sectors. But what I would say...
Well, I suppose what I mean is, what does it say about how Europe's managed to market itself as a sort of luxury capital of the world?
Yeah, well, I think it goes to culture. I think it goes to the comment of Bernard Arnault, the CEO of LVMH, saying Louis Vuitton does not sell handbags, we sell culture. And once that's the premise, then there's almost no limit to what you can sell. So what we've seen also is a form of de-risking. I think the luxury market 25 years ago was, relying on the Japanese consumer. Pre-COVID, more on the Chinese consumer. Now it's about global wealth. And again, global culture. And so it's a much more balanced industry than it used to be. And it's partly de-risked from that point of view because you're relying on, again, global wealth and not one single nationality moving the needle for your business.
So does that mean we should expect to see the luxury market expanding even further? Because over the past 2 decades, it's just been growing and growing. We've got a rebound now, but is that something that's going to continue?
Yeah, I think there is a compounding nature of growth. I think the US market is, broadly speaking, still an emerging market for luxury. There's a lot of wealth, but you did not have the awareness, the culture, the appetite for those goods, and now you're aware and you're willing. I think you have a lot of local clienteles who were ignored literally for decades. If you think about the local French, Italian, Spanish consumers, if you think about in Asia, the local Thai or Singaporean consumers, they were left out because you didn't really need them. You know, you needed in Italy to speak Japanese, Korean, Mandarin, Russian, and English to go about. And then suddenly the world shut, and you started to pay attention to the local consumers in those local markets. And so I think that's the silver lining of COVID. You know, you finally did the work. You finally understood what locals were going after. You are not just relying on the hypothetical comeback of tourists. So yeah, I am bullish for the long term in terms of the compounding nature of growth, because you still have so many people you can recruit within the pyramid of luxury.
Okay, Owen Rombaugh from HSBC. Thank you so much for bringing us your insights on this.
Thanks for having me.